Welcome to the latest market breakdown. Before we dive into the recent earnings reports, please remember that the information shared in this video does not constitute investment advice, and you should always conduct your own research based on your unique financial situation and future expectations before buying or selling any financial securities or future investments, before buying or selling any stocks. Today, we are looking at several companies that recently posted their numbers, revealing significant shifts across the market, with some posting massive gains while others fell short. Apple released solid figures recently, performing quite well despite a perceived lack of focus on artificial intelligence. Total net sales reached $111 billion. Looking at the specific breakdown, product sales increased from $68 billion to $80 billion, while the services division grew from $26 billion to $30 billion. The company's cash position also expanded from $35 billion to $45 billion. iPhone sales, which remain Apple's largest revenue driver, rose from $46 billion to $56 billion, supported by substantial sales volumes in the US and Europe. A major catalyst for the stock was the board's decision to buy back $100 billion in shares. Additionally, the upcoming transition to a new CEO is expected to bring a much stronger focus on AI development. Looking at Western Digital, the company is demonstrating continued hypergrowth. Revenue surged by 45% year over year and 11% quarter to quarter. Gross margins sit at a very healthy 50.2%. Both net income and free cash flow achieve massive numbers, driven heavily by significant expansion in AI data centers. With a PE ratio of 22 and triple-digit performance metrics, it remains a highly attractive investment opportunity, though it might be wise to wait for a pullback given how rapidly the stock has appreciated. SanDisk reported absolutely massive growth metrics across the board. Revenue jumped 97% quarter to quarter and a staggering 251% year over year. Net income swung dramatically from negative territory all the way up to $3.6 billion, representing a 280% quarter to quarter increase. Cash flow expanded from $980 million to $2.99 billion, and EPS skyrocketed from 5 to 23. Despite the stock rocketing up 3,000% over the past year, with a current valuation of 35, the company still appears fundamentally cheap and looks well positioned to continue its upward trajectory. Eli Lilly experienced a massive surge following incredible earnings results. Revenue increased by 56% and EPS climbed by 170%. The company's performance vastly outpaced competitors like Novo Nordisk, a jump largely fueled by the FDA approval and massive subsequent sales volume of the Zepbound pill. Even though the stock remains slightly down from its all-time peak, the underlying numbers are exceptionally strong. Snowflake remains a highly volatile stock, but the underlying